Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader earnings too. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold USD in front of us. And yesterday, gold showed good amount of selling and it made a low of 2011 and right now trading at 2016. Though it has taken support around 2011, my dear friends, but we can see that the bounce doesn't have much strength. So if we just try to understand this particular portion of the market here, we can clearly see that though the trend of the market seems to be sideways, but right now there must be some sellers who have higher strength. So in this market condition, my dear friends, you need to be careful because we can clearly see on the chart that we do not have a trend present. This is the H4. You can see we do not have any clear trend on the market right now. If you are thinking that this is a downtrend market, yes, the structure of the market seems to be a downtrend, but is this a clean downtrend? Obviously no. So as a result, you need to be a little bit careful. And if you look at the daily time frame, we can see that right now gold is showing retracement, and the blue line here, it is the low made by the market, which is 2011. So you can see if market breaks 2011, it will be heading towards 2000 level. So if you are a day trader, then you can look for a sell below 2011 if you see market is going down. And if we look at the 1 hour time frame also, you can clearly see if market breaks 2011 with a big red candle, means if market has volume, then yes, we can expect that market will be heading towards 2002, 2003, and we can look for a sell below 2011, yeah. And my dear friends, 2000 seems to be the next support on the chart of gold right now, 2000 area. So around 2000 area, we can just expect a temporary bounce. Keep in mind there is a big difference between a reversal and a temporary bounce. Means if market hits 2000 level, as a day trader, if you see that market is showing price ejection from below, market is showing a hammer kind of a pattern, you can look for a buy. But that doesn't mean that for the next couple of days the buy will be continuing. Okay, but as a day trader, okay, we need opportunities. We can hit the buy button if market takes support. Second time, when market will be coming down again, do not try to look for a buy. Instead, look for a sell below 2000 level. You can see the same level, but once we will be looking for a buy and the second time we will be looking for a sell. So one market will be breaking when market will break 2000 level, we can look for a sell below it. And technically, as we all know, the next support on the chart of gold is around 1980. So, and if you look at the present condition of the market, it seems that yes, there is a high chance that market will be heading towards 1980, 1975 very soon. But maybe next week. But as of now, let's stick to the level. So considering the present condition of the market, situation of the market, it seems that yes, sellers have an edge. So if market breaks 2011, let me write it down. If market breaks 2011, we can look for a sell below it because this was the low made by the market. Okay, how much we can expect? Initially, we can expect around 50 pips because I have a sell limit at 2011 and my TP is 2006. But if I see that the selling pressure is high, maybe I'll remove my TP and I will try to look for a target of 2003, 2002. You can also do that. And when market will hit 2000 level, I do not have any orders as of now. I will prefer to observe the market around 2001, 2000 level. If market takes support and bounces, maybe temporarily I'll go for a buy. But uh, in the coming days, I think there's a high chance that market will break 2000 and market will go down. In that case, I will be looking for a sell below 2000. You can also do that. But keep in mind, no level is permanent in the market. So as a result, risk management will be extremely important. Only risk management can help you to survive in the market. No strategy is permanent. Okay. So this is what we can do if market goes down. So on the other hand, the best selling opportunity on the chart of gold is around 2060, 2050. Why 2060? Because you can see we have a good amount of resistance around this area previously. Also, market has shown strong selling pressure. So we can expect that around 2060, 2062, 63, we have strong sellers present. If market goes up, we can expect a good selling pressure. But below 2060, we also have a nice selling zone around 2050 as well. Market is respecting FIBO very well. Okay, and around 2050 we can see we have FIBO 78.6% retracement level, but FIBO is not playing the main role here. The main role is being played by the number 2050. Why? 2050 is a round number. It's a psychological resistance. So around 2050 we can expect that there will be some selling pressure. If market reverses according to expectation, we can look for a sell position. Okay, and there are other opportunities also. For example, around 2039, 2040. Okay, during the day, if you see market is going up around 2014 and 40, observe the market around this area as well. Market has been acting weirdly around this area. This area has been acting as resistance. If market breaks 2040, we can also look for a buy above it. Day traders can look for a buy above 2040 as well. So my dear friends, write it down. And if market fails, we can look for a reversal as well. So your observation at 2040 will be very, very important. Around 2040, not precisely 2040, because it doesn't work like that. So if market reverses, we can look for a sell. So when market will enter 203536 area, switch to a lower time frame like 50 minutes to observe the market behavior. See, there is no ready-made meal in the market. Okay, you cannot expect that you will place some orders and you'll be making money. Okay, it doesn't work like that. Hard work is always important. That's why trading, yes, trading may be the most rewarding profession in the world, but it is also very, very tough. Yeah. So yes, observe the market and take the decision. And during the day, if you see market going up, okay, listen to me carefully. If you see the market is going up during the day, especially during the Asian session and European session, you can also look for a sell around 2027, 2024. During the US session, we have a news coming up. Market will be volatile, and 2027, 2024 will not work. But before US session, you can expect these levels to work as a resistance. Why? We are simply using Fibonacci here. We have seen Fibo is doing a good job, so that's why we are expecting 2024, 2027 to work as resistance again. But keep in mind, these two are not very strong, so as a result you need to be careful. As I said, there are multiple levels in the market, okay, but some are strong, some are weak. So as a result, you need to understand which level will be working on which time frame and which situation. For example, 2027, 2024 are weak levels. So when the volatility will be low, when the volume will be low, you can expect it to work as resistance. But during the US session, obviously the volatility is high, so you cannot expect it to work. And as I said, we have a news coming up during the US session, so be careful. Market will be volatile, and when the market will be volatile, try to follow the trend of the market instead of looking for reversals. And my dear friends, we also have ECB, interest rate decision, coming up. Usually, okay, it has impact on euro pairs only, but yes, this time it may also bring some volatility to US dollar as well. After all, everything is interconnected, so be careful, my dear friends. We have a long list of events, and already I have said earlier that I'm planning to go conduct a Instagram session, live Instagram session every week, just to answer questions. So if you want to follow, then you can follow me on Instagram. The link is in the description. And that's all from my side, my dear friends. Thank you so much. Bye bye. Take care. Keep in mind, we are traders, not gamblers, so do not gamble.